Hey guys, Council Glenn with Bridging the Gap, where we talk about bridging the generational gap as well as the wealth gap. We literally take you step by step and tell you how to bridge that gap from where you are to where you want to be from the aspect of a boomer, somebody that's been there, done that in the Xer. Hope you guys enjoyed the content. Make sure you subscribe to our channel and make sure you hit the bell notification. We want to let you know as soon as we drop something, we want you guys to get it, want you to be first. So make sure you do those two things for us, and we can't wait to drop some more content. Good morning, good afternoon, good evening, whatever time it is, wherever you're watching. Welcome to Bridging the Gap. I'm your host, Council Glenn.
Hey, William V. Thompson.
Man, I thought about today. I was like, man, I need a haircut. I couldn't get an appointment with my barber, so
an appointment. It's COVID, then appointment with a barber.
Nah.
What is this new generation going to? We would go in the barbershop, man, just sit around, talk some, kick it around. And when your name was called, you walked up. Appointment. I'm sorry, continue.
You do that today, you'll be in there 3 hours.
Oh, okay. All right.
But no, my barber's appointment only, so that's the way it goes.
Times have changed.
Yes, they have. Man, how you been?
I've been doing really good. Really good. A lot of exciting things happening. Of course, it's tax season now.
Yeah.
And a lot of exciting things are happening. And again, we're seeing and learning a lot of missed opportunities that we're going to share today that people are missing with the tax money.
Today would normally be a big day for you.
That's right. Today is the 15th. That's right. The 1 month extension. That really seems funny, but it feels like it needs to be ending because we've been so busy, and we're thankful for the people out in our podcast audience for embracing what we're doing and passing the word, because we definitely are seeing some major impact in clientele because of that and other things too.
Got it. So today is episode or lesson 15.
Yeah, that's it.
And we're talking about
taxes again.
As I pull it up.
Yeah, from a non-business perspective. Last time we gave them 4 general points. We talked about 1, if you really want to reduce your tax liability without having a business. We talked about number 1, it starts with your employer. Everything from any type of tax deferred benefits. That was number 1.
Right.
Then we came back and talked about what's called above the line deductions.
Yeah, I remember that.
You don't have to itemize. I mean, things like moving costs, health savings account, IRAs. There were about 10 things we gave there that could reduce them down to what's called their adjusted gross income, which is critical in college funding, this premium health care, and many other things. Then we said number 3 is your Schedule A. And it's just amazing. We gave them 10 strategies on Schedule A on what they could actually do to max it there. And then we talked about the power, number 4, the power of giving non-cash gifts that have gone up in value. Again, you're a real estate dude. So, let's say, for an example, you buy a house at $60,000, you put 10 and you got 70. But let's say you donated that to the church and it's worth $120. You get $120,000 deduction, though you only put 70 in. So those 4 major things we talked about last time, but there's more we're going to talk about this time concerning taxes without having a business.
Okay, what's the first one?
The first one's really simple. As they say in Kentucky, get your regular tax refund in your paycheck now.
Okay.
See, counsel, I am amazed at the number of people that get excited about a tax refund. Like I'm doing a lady's taxes this morning. I think last time it was like 11,000. Today this lady's getting 4,000, new lady, and she was very happy. But what she failed to recognize, if she had gotten with us, of course she's a new client, we're going to show her how to take that 4,000, divide it by 12 pay periods, and get about $350 a month in her paycheck. Because a tax refund simply means that you were irresponsible to a degree, that you allow the government, the IRS and the state, to hold your money interest-free for 12 months. But my question, would you rather get $4,000 today, next year in about 12 months, or would you prefer to get $350 every month right now, tax-free?
$350 every month.
And that's what we're telling people. So she's going to learn how to get an extra $350 a month in her paycheck right now, tax-free, by doing nothing but changing one basic form. And she's going to think we're heroes, because remember, cash flow is the rocket fuel to building wealth, and that money's tax-free, man.
And that's also one of the tips that we can use to lower or close the gap in the financial number. I mean, you talking about 350, you ain't worked the extra hour.
No, you did.
You haven't picked up a part-time job. You know, you ain't cut cable, none of that. I mean, just by filling out a form.
You're right. And that's the power of getting an informal education. I mean, these podcasts are priceless. Sure. I believe that people should consider going to college if, they're college people. And I think many people, some people will be, whether you are or not, it's that informal education. Again, you've heard us say before, a formal education does what?
Makes you a living.
Okay, he's going to be okay. An informal education does what? What do you want to make in your life? A fortune.
Yeah, a fortune. That's
So,
what it is.
like I said before, we both have had a
fortune.
little education here, but the thing that really allows us to turn around financially is not what we did in 4 years or 2 years or even at James B. Dudley High School.
Yes, sir.
But it's that informal education that we are continuing to get. And that's what Bridging the Gap is all about, empowering you with an informal education to build wealth.
Agreed 100%, man. I know a lot of people get happy come tax time and a couple weeks, after they get that large check is gone. But I would love to get that over a 12-month period.
Yeah,
that makes a lot more sense to me.
It's about cash flow.
Absolutely. Right. Now this next one threw me for a loop when I first heard it. A 6-month IRS loan. I'm like, hold on, what is that?
Well, I'm glad you asked. Here it is, guys. In the tax system, and again, I'm a retired CPA, so I love taxes because the wealth that Joe and I are building by God's grace, I don't really like Uncle Sam getting a lot of my money because he hadn't done anything. Well, let me take it back. He provides roads and police. So let me retract that somewhat. But I'm going to let you all pay for them and not Joe and I. Here's the point. The way the tax system is structured is that as far as your taxes being withheld, it's assumed that you equally are paying it throughout the year. What I mean, let's say if you and CC determine that you really need $12,000 a year to break even. Let's make that assumption, $1,000 a month.
Okay.
So whether you paid it $1,000 a month or you paid $12,000 in December, in the minds of the IRS, you literally paid it evenly throughout the year. So how do we use that law for our advantage? What I normally tell clients to do, let's assume you're going to break even. For the first 6 months of the year, don't have a dime in taxes taken out. Nothing. In other words, we show you how to change your W-4 form. So let's say you were having $1,000 a month taken out.
Got it.
So for January, you don't have it taken out, you get extra $1,000. February, all the way through June, my friend, you don't have a dime in federal taxes taken out. In our example, $1,000. So now you have $6,000 or another $1,000 a month positive cash flow for 6 months.
Got it.
All you have to do now is to have a plan between July and December 31st of that year to pay the $12,000 back. You could simply double up your withholdings in July, start paying $2,000 from July through December. Or you could say, okay, I know I'm going to have a flip in November, December. I'm not going to have any taxes taken out. And in November, December, when I get that flip or that bonus or whatever, I'll simply have $12,000 withheld or paid in estimated taxes. All the IRS knows is that $12,000 was there by December 31st. And based on the law, they assumed it was evenly paid in. That's a powerful strategy I've never seen anybody else talk about, and it's simple.
Yeah, it is. And you could use it for a lot of things. I would definitely recommend having a plan going in before you do that, though.
I like the way this guy thinks. You're right, man.
Because that 12 is still due now.
It's due. There you go, brother.
So I wouldn't want to double up that last 6, especially after you got used to not paying anything.
Yeah.
It would be smart if you're going to do that to use that extra $1,000 a month to pay down some debt that increase your cash flow, that maybe allow you to pay that 12. Or if you if you're doing some real estate, you got to flip that you're going to finish and close, or use the proceeds from a bonus or something to pay that back. But that extra cash flow you can attack debt with, knowing that November, December, something's coming in to cover that tax bill.
That's it. And that's the kind of thinking we're trying to advocate. Don't go out and get a new car payment. Don't take it and buy new clothes. Find a way to create an asset or to take advantage of opportunities so that you will, because like you're saying, it's due and you must be ready to have it paid off before 12/31 of that comparable year.
Agreed. Okay. Let's see. We talked about number one, number two, number three.
Okay. Another real simple one when you understand tax law. And if you're going to build generational wealth, you don't have to be a CPA, MBA, but you're going to have to understand probably 10 to 15 key laws. And this is one, getting back more of what's withheld. And let me explain that. Let's go back to the $12,000.
Okay.
Let's assume that you were having 24,000 withheld. Okay. So not say with 12, let's say you're having 12,000 withheld. The question is, what can you now do to reduce that 12,000 down to 8?
Mm-hmm.
See, people get comfortable. I've been paying that 12 for 3 years. I'm comfortable. It's in my budget. But they never ask the question, or they never ask their tax practitioner. Okay, William. Okay, whomever. 12,000 is what I've been owing the IRS. What strategies can we employ? What kind of planning can we do to maybe get that 12 down to 10? I picked up 2,000 for the year. Let's get that 10 down to 8. Let's get that 8 down to 6. I ask my clients, ask me how to reduce your taxes 50%. And I can't do it year number one, but give me a few years. And if you're open to teaching and learning, we can probably help you cut your taxes legally in half. So the bottom line is this: get more back that's withheld. If I'm withholding 12, I want to get 12 down to 6. And what did I do? I just gave myself what I call an instant pay raise that's tax-free. And by the way, none of the strategies require you to tell the IRS, because we're doing nothing unethical. And on that last one I talked about, on the 6-month interest-free loan, it doesn't matter about your credit, brother.
Gotcha.
This is a tax strategy.
Gotcha. So what is one of the ways you reduce that $12,000 tax bill?
I think, okay, it goes back to podcast 14. You know, I would definitely max my company's tax deferred benefits.
There we go.
And I would max my above the live deductions.
Okay.
And I would max my Schedule A. And I would look at non-cash donations. And I would look at having what's called a pass-through business, like you have the S corporations. And I would learn to legally create more losses by hiring the children, by having board meetings in my home, by converting vacations to board meetings. We went to Hawaii a couple of years ago, my family, but board members, we wrote it off. So those ways, plus a few more, could actually cut my taxes in half. It's all about tax planning.
Got it. I like that one a lot. So I like this one too. Amend it.
It's amazing. Again, people fail to recognize that. Let's say you're like, oh my God, I'm hearing all this great tax information, but I didn't do it last year. I didn't do it the year before. I didn't do it the last 3 years. What am I going to do? Well, again, every problem has
multiple solutions.
You got it. The name of the game is amended.
Yep.
We tell people, I don't care where you are, in California or New York or North Carolina, if you see that, boy, I think I've missed some things, we can go back the last 3 years. We can analyze, review it, and see if there have been some missed strategies. And we can go back and amend both your federal and your state for 3 years. The average person, a lot depends on whether you're a minister, a business owner, real estate investor, etc. But the average business owner who does that, we normally can find them $2,000 to $3,000 worth of new money because of missed deductions. So let's go 2,000 for 3 years. That's $6,000. Here's the crazy thing, Council. If we amend your federal, every year that we amend, they'll even add interest to it. Now, I don't know why they do that. I don't know. But the 6,000 could be 6,400 because they said for 3 years, we owe you another $400. But the bottom line is, this is the last strategy for lesson 15. But we want people to remember, free of charge, we will review your taxes. If we can help you, we'll do it. If not, we won't hurt you. Because remember, as they say in TurboTax, free. But if we can help you, fee. Right?
As they say in church, I'm a witness to that. You you did mine, and I think it was over $8,000.
Yeah, I think you're right, my friend.
Yeah, that was several years ago, but man, that helped out a ton. Yes, I think people minimize the importance of proper tax planning.
Oh, I know they do.
And how it can save you so much money. down the long run, it adds up over the years.
It does. And see, I can tell when people don't understand the tax laws, when they get mad at people, I won't name names, who are making millions and billions and aren't paying much in taxes. And some of these wealthy people are saying, listen to this, we don't pay enough in taxes. It's all because not that they're smarter, but they recognize that they get professionals who understand the laws. You know, the tax codes are golly, thousands of pages, but you find those 10 to 15 things, you learn them, you understand them, and you make a lot of money, but you legally pay a little bit in taxes. Like with Joe and I, like I said before, by God's grace, I got another refund back this year. I paid nothing in the tax system and legally got a refund back this year. And got what? Matter of fact, my refund came in less than a week. Now I don't understand why, but my refund came less than a week because what we do tax planning throughout the year. It's 2021 now. We are doing tax planning for 2021. And by probably July, we'll have our plan solidified. And if I miss something or a new law comes out, I got 6 months to implement it in 2021. Anybody can do it at any income level.
Yeah, and I think one of the things that kind of deters people from doing it is, they're not making $200,000, $300,000, $400,000.
I get that.
But you have to start playing the game now,
Yeah.
so that when you do make that kind of money, you already know what it is. And so, I would encourage anybody, even if you're a regular just W-2 employee, to start learning the game, because literally, the billionaires, the millionaires that are making all this crazy money and paying zero, they're playing a whole different game from a totally different game. And until you get in the game, you can't learn it and dominate it.
That's right.
So no matter where you are, you got to start somewhere.
That's it. And a couple of low places to start at is one, the podcast.
Absolutely.
And connecting with us with some Q&A.
Mhm.
We'll start doing some live things, I think, sometime in the future.
Yes, sir.
And then also even start reading books by people. And just, if it's in a book, it doesn't always make it true, but I guarantee you a lot of things you read by well-known people of what they're doing, it's going to blow you away because it's a whole set of rules they know and are playing by that the average person isn't, and Bridging the Gap wants to help.
Agreed 100%, man. So I didn't used to like taxes, but these are obviously becoming a part of my favorite part, just because, it's something that you got to pay attention to nowadays. So
that's it, because it's a problem. You go ahead and you make, let's say, $100,000 and you give the government $25,000.
Mm-hmm.
That's somebody stole from me, and I'm gonna do something about it.
Absolutely.
All right.
Absolutely. Well, that wraps up episode 15, man. I love it. I would replay this one a couple of times if I were you.
I agree, brother. It's going to make you a lot of money.
Yeah. So we'll see you guys next week for 16. I think we're talking about
taxes
again.
What a business.
I like this one.
Totally different strategies, but they're powerful.
Yeah, definitely tune in on this one. I'm your host, Councilor Glenn.
Hey, William V. Thompson.
We see you guys next time.